Hi, everybody. This is Alan Elman, the Blue Collar Investor, welcoming you to this sample video trade that I executed on Monday, which was March 10th, 2025, for an expiration on March 21st, 2025. It's an in-the-money covered call trade. Right now, the market has been very bearish, going down because of tariff concerns and the chaos and uncertainty created by those tariffs. So the entire market has been plummeting of late. So I took a defensive posture with this particular trade. So let me start off by showing you the reasons why I selected this security, because what BCI does, it finds elite performers even in down markets. No matter what the market is, we're always going to find some elite performers. And Royal Gold, RGLD, is one of them at the point in time that I executed this trade. So RGLD at the time on Monday was trading at 155.50 and had been on our premium watch list for 3 weeks. It came, the ideology, from our BCI database. So we have a database of over 3,000 securities that we've identified over the past 18 years as potential option candidates, and this is one of them. Now, RGLD Royal Gold does have a robust implied volatility of 31.4% and is located in the mining industry segment, which is currently ranked A. Now, the mean analyst rating is an outstanding 1.82 on a 1 to 5 range, with 1 being the best. And the on-balance volume was bullish, meaning more cash coming into the stock on up days than on down days. So that's a bullish signal as well. Now, the next earnings report is way outside the 321 contract expiration. It's 514. It does have a dividend yield of 1.2%, and the ex date was also outside of this 321 expiration, April 4th. So if retaining the shares was critical, we don't have to worry about the ex date. Now, it did have adequate option liquidity, and those are the reasons why this security was selected for one of my portfolios. Now, the 150 in the money covered call with a 2-week expiration had a bid price of $7.20. Now, in the money calls offer additional downside protection because of the intrinsic value component they offer, and therefore a lower break-even price point, which reflects the defensive nature of this particular trade. Now, I'm showing you now the initial calculations taken from our BCI trade management calculator, and you see on the top we entered the price of the stock, the in-the-money call strike, and the premium of 720. I happened to do 500 shares, 5 contracts in this particular trade. Now, the spreadsheet will then tell us that days to expiration, 12. The initial time value return in the brown cells here is 1.13%, and based on a 12-day return, that annualizes out to over 34%. Now, the purple cell says downside protection of 3.54%. What that means is we are guaranteed a 1.13% profit as long as share value does not decline by more than 3.54%. Now, the break-even price point is 148.30. That means we're not going to lose money unless Royal Gold moves from 155.50 down below 148.30. So you can see the initial time value return is significant. The protection is also significant. And this is a wonderful defensive trade made with an elite performing security at the time that the market was unfortunately plummeting. Okay, folks, so that ends this short video demonstrating one of the trades taken from one of my option portfolios. I hope you find this information useful, but more importantly, I hope it puts cash in your pockets. As always, this is Alan Elman, the Blue Collar Investor. Take care, everybody.